People, what is happening? Let me know if you can hear me. I've sorted out the recording side of things, so we should be Gucci. So just let me know about the audio, and then we're gonna get going. Also, let me just quickly unmute the boy, wherever he is. Here he is. Okay, Alex, you are now unmuted. There he is.
Yo, Alex, what's good?
Not much. How are you? Are you well?
I just woke up. Yeah, I'm well. I just woke up right now. Still sleepy, kind of, but yeah, it's okay.
That's good, as long as you're awake. As long as you're awake. Okay, let's see. We had a lot of registrations for this, so maybe just give people a couple of minutes, but obviously we can just do a bit of an intro until then. So people, as long as the audio is good, obviously I can hear the other Alex, he can hear me. I expect everyone can hear everyone. So today, you know, what you can see from the title, it's obviously one Alex and another Alex, both in the Forex family, got our own groups, etc. You know, we're gonna talk trading. We're gonna strip everything back basically, and we're gonna go over as an agenda. So it's going to be, you know, post NFP, talk a bit about non-farm payroll and what happened. Then we're going to talk technicals on USDJPY and maybe another pair, I don't know. Then we're going to go through a bit of sort of psychology, mindset work. Then it's going to be general Q&A. You know, pretty standard. So let me just make sure if I can see in the question box. Okay. Also, you'll have to probably bear with me a little bit because my mouth is so dry. It tastes like apple Ciroc. So you know, just bear with me on that. If I pause when I'm speaking, it's literally just to have a drink because you know last night got a bit out of hand. But yeah. So we can see my screen. So Alex, first off, you want to talk about non-farm payroll a little bit?
Oh yeah. So, like, I hope everyone is in the building right now. And, so we're just gonna go straight to like NFP, and
Yeah.
so many people like yeah, so many people are asking like what to do or how to trade NFP and all that. And for me, I was expecting a bearish NFP, and as it came out, it was bearish. But then again, the unemployment rate was fell, so that means the economy of the United States was actually intact and it was growing. So NFP turned out to be bullish, and like with that being said, you know, people should understand like NFP week is actually one of the most like weirdest weeks in trading, and like as an amateur, you wouldn't want to trade NFP or even 2 days before NFP because the market is in consolidation. It sometimes doesn't like really respect technicals. If you are a technical trader, we look at NFP, you know, the NFP jobs, it decreased by 33,000, primarily because of the natural disasters that happened in the United States, the hurricanes and all that. So with that being said, we were looking to go short on the dollar. However, you know, unemployment rate fell from 4.2 from 4.4, meaning there was a 0.2 drop, and this was the lowest since May 2001. So as a trader, you should actually look into like those factors before you can actually start maybe analyzing the market based on the fundamentals. And so many people, I saw so many people on Instagram, they lost a lot of money trading NFP because they just waited for NFP to be released and they saw, okay, it was worse than expected. So technically the dollar would have fallen, but they didn't take into consideration the unemployment rate, which was much better. So unemployment rate is the long-term indication of the economy. NFP is just monthly, but unemployment rate is something that affects the dollar for a very long period of time. So the unemployment rate fell from 4.2 to from 4.4 to 4.2. That means it's a 2-point decrease, meaning the dollar actually got much stronger. And so this was the main reason why the market rose on Friday, as you guys saw it, um, because the economic data improved overall. And like for me, I have uh, a way of trading NFP and PMI interest rates, and I'm actually making a PDF on that. So it's gonna be released as soon as soon. So like in a nutshell, you trade on the deviation. I always tell the Forex family members that when the NFP is about to be released, watch for the news. Take the deviation from the actual and the previous one. If it's 20% deviation, whether negative or positive, trade on that direction. It's that simple. But I'm actually making a comprehensive PDF on that, and it should be out soon.
Yeah, that would be
And
interesting.
so actually,
In regard
yeah.
to the way
So
I trade,
actually, that is the bit of. And
um, and so for non-farm payroll, so you said you had
excuse,
like a,
pardon?
can you hear me?
Yeah, 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 yeah.
All right, cool. So so you were talking about bearish movement for non-farm payroll. Personally, I actually made a judgment course um, before the numbers came out to my group. I actually said bullish NFP. Um, Reason being that actually overall, I thought it was probably going to be priced into market structure as well as obviously the numbers. And so I said to people, the likelihood is we're going to go, to two potential places. We're either going to go to the number that we did go to, or we were going to, if it was bearish, you can see on my chart there where my cursor is. I expected probably that's where we would head towards if it was obviously a bearish NFP. Um, so I think this next couple of weeks, like post NFP, are going to be interesting because I would agree with what you're saying in terms of I think the dollar will go short over the next couple of weeks. So
Yeah, like, like, and also like what people should understand is when you look at fundamentals, as you said, price is already priced in. Like the institution, they already know the numbers. So what they do is they have already set their positions, and it's evident because price moves from zone to zone, right? And as you can see, how the market was setting itself up. It For me, long term, it wouldn't. There was no indication that we were actually going short. And
okay,
and when NFP came about, the price just closed above my 4 hour zone, and yeah, that's why I knew, like, okay, this is where we're going long. And it's that simple. Like, you just have to understand the market structure and understand that news is always priced in. And once you understand that and understand the basic laws of supply and demand, it's gonna be easy for you. You wouldn't even need to actually wait for fundamentals and all that, because personally, I'm a technical trader. I pay little attention to fundamentals, and so far I'm good.
when we're talking about price being when we're talking about news being priced into the market, this is what we're talking about when we talk about institutions. Essentially, like you notice every time there's a big news event, there's always pushes for premium prices. We're on a daily time frame now. Oh, look at this. What is this? Two big pushes pre-NFP for the 2 days before NFP comes out. Big pushes in both kind of directions, both candles, leaving massive wicks. So in my opinion, there's where institutions are essentially saying, okay, well, we know what the numbers are. This is the price we want for non-farm payroll because we're expecting it to be bullish anyway. So we'll push price here, take positions, then the price will be pushed in their favor anyway, because people will still be going long on USDJPY because people think it's probably going to go to 114 again and retest this little top area up here. Personally, I would, we'll talk about my thoughts for where UJ's going over the next couple of weeks in a moment. But so this is how when we're talking about the news, this is what we're talking about. We're saying chances are, you give yourself two scenarios and you say, well, if numbers are bad, this is where price is going to go. If numbers are good, this is where it's going to go. With it, we're basically thinking like the bank and saying, okay, well, if I was an institutional trader, how would I trade? Where would I want to take entries? Of course, you want to get the best price. So the push, that's what moves the market. My positions, Alex's positions, anyone in the Forex family, I would doubt that their positions have any effect on the market, no matter how big or small. We're not moving it. We're literally just picking up the crumbs. And so here you can see, and what I do as well for all my webinars, I always type what I'm talking because it's just easier than doing subtitles, etc. And also it helps for the recording and sticks in people's heads a little bit more for some notes. But so this is what we're talking about. 2-3 days before, big price pushes, set up essentially. Markets making high highs and high lows, because you can essentially see that market has been very bullish since mid-September. Because I actually had buys a few weeks ago. I had buys like here, and I got stopped out, and I was so annoyed. But it happens. But so since this point here, I've been very bullish. So why are we just going to turn around? Essentially, is what I'm saying. But so there's where we talk about news. So let me just quickly dive into the question box because people are asking me a question about NFP. Okay, NFP is no joke. Yep, NFP is not a joke. How do you trade NFP? If you're new, you don't. And even if you're me, technically I don't trade it really. I might pick up a wick fill when the news has come out because your price is going to be in momentum. But apart from that, I'm not really a big NFP trader. I don't really trade the news that much because I just think you can. It's a double-edged sword. Essentially, you can go very well, could go very bad. Last time I looked at NFP, I think I took sells on gold a couple of NFPs ago, and there was no whipsaw either, which was nice. But usually with non-farm, there's usually whipsaw, so that's why I don't really tend to trade NFP. Is that premium price? Yeah. So the arrows that I've pointed at is premium price pushes, in my opinion. Okay. Can you analyze? Okay. So Alex, what I'm going to do now is I'm going to give a little talk about what I think is going to happen for USDJPY over the next week or so, 2 weeks, and then obviously you can just sort of dive in and talk about it as well. Right, so where do I think it's going? Okay, so so you can see here, so where is USDJPY going next? That is the question. In my opinion, you can see we've got these points here of big big taps into a zone. It's like cuts into a zone essentially. You've got what, 1, 2, 3. You've got like 4 big wicks that tapping this price. So obviously that's why I've drawn a little zone of price, a little price level. Essentially, this is on the daily time frame as well. So we've had, you could class this as perhaps got a bit of consolidation because we've essentially were in a bit of a range at this point here. Tap there. Probably going to come back and maybe tap here because we've gone over at this point. In my opinion, I'm not interested in trading yet, and that what will make me trade USDJPY is if we go if we go bearish and we close below this point here, so this point in price. So also, I actually don't care what happens because obviously USD isn't my economy. I literally don't care. So I have no kind of bias or attachment, which is A, why I trade USDJPY, and B, why if it's a buy, it's a buy, and if it's a sell, it's a sell. Like I don't mind. But so 2 things I'm looking for: 1, break of market structure, HH and HL. I'm also looking for a break below support. So essentially, this is what I want to see. I want to see the price come down, and price will take a couple of days to develop. I don't think it's going to be instant. You've got like a 60 pip move before I'm even interested in taking sells. Because I don't trade in the middle of a range or in the middle of zones. It's just not part of my plan. This is obviously on daily. I'm going to jump down to a smaller time frame shortly. But what you can see is price is essentially in the middle of a range. We tap resistance, tap support this week. We're essentially moving sideways. In my opinion, this daily wick, you've got a big daily wick. And I actually don't think that USDJPY is a buy. It could. I mean, it could be. There's always 2 scenarios, so it's literally always 2 scenarios. But I'll be interested in taking USDJPY buys if we can sustain. Interested in buys. Interested in buyers if. We continue in structure, HH and HLs, and also significant. That's what I'm trying to think of the word because I've still got a hangover. Significant close in price above res. So this doesn't mean a 5-minute candle to close above. This is like an hourly, 4-hourly. If we sustain and break a resistance properly, then I'd maybe be interested in buys. And I mean, there's a long way we could go really in terms of buys, especially if we get past this point there. We could be seriously off to the races because obviously the USD is holding value, etc. The economy's doing quite well, as you've seen from the NFP numbers after obviously quite a few disasters, which is not good. But so looking left, always look to your left. You can see at this point here, we can see price is probably going to struggle because we've struggled at this point here and at this point. So that's essentially like a double top, and hence why price essentially moved down. It's very difficult to say, especially because we haven't got any trading sessions under our belt. But I think personally it's a short, and if it is a short, so if we can sustain, so if it is a sell, why sustain, close significantly below 112. If this happens, and if it is a sell, the first place we're gonna go is gonna be. Also, you could probably say that candle is what's it called? I don't really use candlesticks. I don't really use patterns. But I'm sure it's a reversal pattern in someone's eyes, which gives you a bit of extra confluence. Perhaps price may respect the daily EMA as like a bounce, perhaps. I don't know. But if it is a sell, first take profit's going to be there. Second take profit is going to be like here, or maybe there. So it's either going to be there or it's going to be there. Reason being, you know, you look to your left and you see where price is probably going to stall, probably going to struggle, and then it isn't rocket science. 1 minute, let me just have a sip of my coffee. Hands are shaking. But yeah, so if it's a sell, that's why, and that's where price is probably going to go. So you've got a range of, so like perhaps you take entries, like, I don't know, maybe use pendings. Like pendings are so underrated. I don't know why people don't use them. So you know, maybe it's take a sell at 112 flat, and that's, you know, already like an 80 pip kind of move. Price probably struggle there as well, which is like 50 pips. But if you do 80 pips times like 2 or 3 positions, that's more than enough pips for the week anyway. So it depends on what kind of trade you are. Depends how patient you are as well. So yeah, that's what I think will happen over the next week or so, or 2 weeks for USDJPY. Essentially, we're consolidating, but we're still, you know, respecting market structure for the bulls, who are obviously in control. So, you know, in my opinion, I'm not ready to trade, but if I do, I'm waiting for a close above this point or a close below this point. Two kind of valid setups. We're essentially at kind of at a support now, where prices closed was like a resistance that I was expecting. Once we broke that resistance, we was going to move up in price and sustain like the move up. But of course, you have to take into consideration obviously the factors of NFP and news being a catalyst. So, you know, things didn't go to plan 100% with the technicals, but it is what it is. But so yeah, that's my take personally on what's going to happen in the next couple of weeks. Alex, what do you think is going to happen for USDJPY?
You know, like that's exactly how I think also, and you know, it's basically also supply and demand. We came from demand, we're heading up to the supply zone after, and for me, the top zone at around 113,500 area is, you can see that's it's either a base where orders are actually being placed for attack on the bearish order block. If not, we're going to actually drop down to 110, 111 area, and as you said, you know, a valid sell would be if we close below the support area at 112, around 112, 608 area. And so for me, Monday, Tuesday is not really my ideal trading days. I'm just hunting the trade, and whatever happens, I'm gonna ride with the trend. But keep in mind, we're still in the bearish order block. We're just taking it out 3 quarters, and once we take out the bearish order block on the left, we're actually gonna start dropping back to the demand area. It's that simple. And like most people that I know, and so many people in this webinar right now, they are very good traders, but the problem is they don't have the patience to wait. If I can wait for 2-3 days for markets to set itself up, and I get my 20% or even 10% in a single trade, why can't you do that? Like, there is no need for you to rush anything. Let the market set itself up, and let the trade come to you. You know, as Alex said, he's gonna look for sells or buys close below or above the zone. It's that simple, guys. You know, and that's exactly what I'm gonna do. There's no need for you to actually be a hero and try and take setups that are not even there, you know. So for me, I'm waiting for market to set itself up later today, and also tomorrow, probably Wednesday. That's when I'm gonna start trading. And for me, on the daily, we're looking like we are about to actually take out the bearish order block, and After that, we're gonna start dropping. But I don't see any upside movement from USDJPY. If it reaches 114,500 area, I think it's gonna start dropping. Reason why, if you look left on previous price action, that's exactly what it did. And so, price tends to repeat what it always does, over and over again. And that's exactly what I look for. And if you keep it simple, you don't have to complicate everything. You just follow the trade where it's going, you know? Like us guys, the retail traders, we are the most confused fellas in trading, The the banks, the institutions, they always move in the same direction. So why don't you do the same, Trade like the banks, as Alex said, You just follow the trend, wait for setup to manifest itself, and you're gonna be good. And that's exactly what I'm planning to do. And for those of you who know me, you know that I don't really trade as much. I only take 2, 3 setups in a weekend. That's it. Because I'm waiting for premium price. I'm waiting to get into the market when every confirmation is in my favor. I don't want to start biting my fingers and screaming all over the place. Yeah, so trading should be like as easy as breathing, But you have to just follow the rules that you've created in your trading plan and all that. So a break on the resistance or demand zone, and we are off for buys. A break on the support zone and a close below it, we're on sells. It's that simple.
Yeah, I mean, I think people just get
So I
like
think that's my outlook on. Yeah, continue.
um like you've just said, literally patience is such a virtue. Literally everything that you've just said, I was just nodding just because it's so accurate, so accurate. That's what we've got there.
Yeah,
Um,
exactly. And Alex, can you talk about the EMAs a little bit? Maybe some guys over here maybe wanna hear about the EMAs and all that.
yeah, sure. Okay, so just in the question box as well, just keep the questions coming because we'll cover them. I'll make sure we cover them all at the end. I will talk about EMAs short now, and then I will analyze GBPJPY because a lot of people are asking about it, which is absolutely fine. Like, I don't mind. And then we'll move into what Alex was just briefly discussing, which was the patience and the mindset. I think that is what destroys so many people. They're technically very good in terms of their chart work, but it's their brain that just completely plays them, and essentially takes a good trader to a bad trader because I can't wait. But yeah, I'm going to talk. So if I talk EMAs quickly, and then I'll go into GBPJPY. So let me just get rid of all this crap. Right. Also, EMAs are basically, Wakar is Mr. EMA, but I've traded EMAs for a little while and I know a little bit about them, so I can definitely cover them. So let me jump down to like a tiny time frame. I want that text box to stay there. Okay, so let me jump down to the 15-minute. Okay, the EMA trades I take are based on like 5-minute and 15-minute crosses usually. 15-minute cross, the higher the time frame, the stronger the cross, the stronger the push in price. Essentially, like you can see, price is essentially ranging anyway. Like Alex said, basically we just got to sit on our hands and wait for price to develop for the next couple of days. So EMA work. Okay, so I use 14, 50, and 200. The reason I use 3 is because the 200 EMA can act as a nice take profit area, or resistance stroke support. I noticed that a hell of a lot Um, you can see that 200 EMA gets respected, and I take profit a lot of the time at 200 EMA, just because I know price will probably stall for a little bit before it breaks below it or breaks above it, etc. So I use 3 EMAs. You've got 14, 50, 200, like you can see on my screen. All nice, different, pretty colours. It doesn't matter what colour they are. It doesn't matter. It's up to you. It's really up to you. Like, because I got a question saying, does it matter what colour my EMAs are? Before I said definitely doesn't matter. So even if you miss this, so what we like is we like the crossover, don't we? I've just got on a message. Okay, I think RAG. 1 minute, I've just got a text off RAG. Let me just quickly reply to him. Sorry about this. So that's RAG.
Is RAG here?
No, he just said he wanted to know about GoToWebinar. Just ask him.
Oh.
Because he said he got logged out, but I did as well. I didn't like go to webinars. I was playing games. So this is what we're talking about. So we want to take the crossover. Everyone wants to be in before the cross, don't they? Everyone wants to get this big push. So the cross is what we want, because what does it show? Cross equals momentum. That's what EMAs are. That's what moving averages are. They're a momentum-based indicator, so they essentially give you a clue or a confluence where price is going to go, because if they cross downwards, price is probably going to push down. If they're pushed up, price is likely going to push up. They're not gospel also, because as you can see, they're a lagging indicator anyway, so don't trade. You can trade purely on EMAs, but just make sure you have a look at market structure as well. Just because they cross over on a 5 minute doesn't mean that market structure is going to change. Sometimes it's a fake out. So you want to basically wait for 2 things. So cross means momentum. So 1, you'll get retests of price anyway. Don't panic. So don't panic. So you'll get a retesting price, and I'll show you what I'm talking about when I'm talking about retests. But so if you miss the initial cross, don't worry. Number 2, smaller time frame, more fake outs. So like 5 minute is nice for like 10 or 15 pips, but sometimes it's literally just a fake out. It's a pushing price, and then they'll cross back over. So what I'm talking about, they cross like that, then they cross back to the upside, and then essentially you're sat in buys when actually it's probably just like a liquidity grab on a 1 hour or 4 hour candle, depending on candle timing. I've done a video on that. It's also on YouTube. If you haven't looked at that, make sure you do, because it's worth your time, I'd say. But so yeah, I think it's important to make, don't take it as gospel, but make sure that's a good point. So so the 5 minute isn't breaking structure. It's essentially making another low or high. So it might be making a low, 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 high, 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 low, etc. So a 5 minute cross is not going to be the be all and end all. I mean, sometimes it can be. Sometimes there's a continuation. So price essentially moves in one direction, then it crosses to the upside, and the EMAs cross to the upside, and then so you're looking for, what I'm trying to say is, look for support, resistance before you trade EMA. So if the price is at a support or at a resistance, I'm not interested in taking a trade on the EMA, because like I say, it could be a fake out. Because what do we do at support? Well, obviously if it's a 1 hour or 4 hour, we take buys. If it's at resistance, we take sells. I mean, it's just as simple as that. And Rakil did a webinar on it yesterday, and he does, makes a lot of Instagram posts about it, because it really is that simple. We ran like 10,000 to like 40,000 in 8 trades, just selling resistance, buying support on 1 hour and 4 hour. So if you can mix EMAs into that, you know, quite nicely. But when I'm talking about, so we've got the cross, so so we get retest of price. Now this is what you want to look at. Just because the EMAs have crossed over and you haven't taken a trade, it doesn't really matter. Just don't know. Right, let me just reply to Rag. Okay, so just because you haven't taken a trade initially, you haven't caught the initial crossover, it doesn't matter. Price is always going to come back and retest, usually. So what do we look for? So on a 5 minute, usually. So get retest price. I don't know what that is. Look on the 5 minute. Look for exhaustion. Stroke rejection in price. So for example, if we're moving down and price essentially pulls back, so we've got a prime example is here, look, let me zoom in. Price essentially moves down quickly. You cross over on the 5 minute there, so let me get rid of that arrow. Move this up here, so you can see at this point here, we've had like had to retest. But look what you've got. You've got you've got 3 wicks basically saying, okay, we are at support now on like a 5 minute. If you look to your left, there's probably okay, well the candles are too small, but if you find support on the 5 minute, maybe 15, 3 of those candles are essentially a 15-minute candle because we're using the 5 minute. So one 15-minute candle of like a decent rejection and like a decent way that price is holding it as support, then you might take buys back to the EMA. So this is what Wakar calls an EMA magnet. You're trading against a trend, so you're trading counter trend. So it's not. Personally, I'm a trend following trader. Like Alex said, what's the point of trying to guess the top or guess the bottom? But if you do want to be like that, because Wakar makes a shitload of pips and aka a shitload of money doing that, so it works for him, could probably work for you, but don't dive into it with your life savings just because you want to be the next big EMA trader. So you can see here we've found like support on like a 15-minute because you've got 3 5 minutes, of course. Time, especially with the time there, I wouldn't have traded that because of the time. So it's like 4:50, 5 o'clock UK time, which is the end. So London closes at 4 UK time. So after London closes, I don't care because volume of like price movement is probably going to stop. Really, it's not going to move a lot anyway. Like you can see, you've had like a push up like 15 pips and a push down after that. The 15 pips literally just moved sideways until market closed at 10, which is pretty normal. So you can see this is what we call an EMA magnet. Like I say, Wakar's the best person for this. The next time you're on the toilet, I always say this, but people just don't seem to be listening. When you're on the toilet next, go to Wakar's page, which is at EMAs Don't Work on IG. Don't message him, but read his captions. So read captions on the toilet. If you're anything like me, I literally sit on the toilet for like half an hour at a time, just catching up with social media usually, or I just sit. I like to sit there because it's a bit of me time. As weird as that sounds, just a bit of me time, just me, my phone. Maybe take a magazine or something. That's what I used to do when I was at work. I used to literally sit in the toilet for like half an hour at a time because I used to essentially get paid for being in the toilet. So why would you not do that? But so Wakar, it's best to talk to you about EMAs. But that is how I trade them. So also as a rule of thumb, so if you miss the cross, wait for a retest. So like I've said, EMA magnet. So magnet. So if the 5 minute holds price, so and exhausts, rejects. If the trend is strong, and so you know, look, you can see it's a bearish move. So it's a big bearish move. So you can come back and retest the EMA. Chances are price is going to push down again. So it's like it's almost like a liquidity push, liquidity grab as a magnet. That's the best way to probably describe the EMA, like retests. But so if you think about that, so this is what at Scottie Pippen. So when I joined Forex Family, he was in the same group as me, and we was quite close because we used to go on Skype every day. We like he essentially made this what it is, and sort of talked to me about it. So this is how I know this, and obviously back testing with him as well. So 5-minute retest. This is also this is not gospel, but probable. But it's probable. We work on probability as trainers anyway, so it equals a 1 hour wick fill, 15-minute retest, 4 hour wick fill, 1 hour retest on the maybe daily. Use that as a rule of thumb. So if price holds the EMA here, chances are you're going to fill this point here. So let me just jump onto the 1 hour so you can see exactly what I'm talking about. Remove all this text and this. Okay, so you can see what I've just pointed at. Price has pushed back, pushed up here, again, found support, probably a liquidity grab, because we've had overall bearish momentum, we're pushing down. Right, that's our message.
Alex, can you hear me?
It is on computer audio. How about now? Is it working now? Yeah, there we go. Right, we're back. Yeah, Alex, I can hear you as well now. My mic was just fucking up. Sorry, everybody. It's a little Tesco mic. You guys know how it is. I got it for like £20. So just to refresh everything I was saying while you probably couldn't hear me, it's my bad about that. So if I quickly do a refresh what I was talking about. So I was typing what I was talking anyway. So even if you couldn't hear me, you can still see on screen my notes. But so yeah, there might it does that. It sounds like a van. Sometimes it just after like an hour, it essentially just starts cracking up. I don't know why. And you just have to plug it into the other side of my Mac. But so you can see what I've drawn on screen. That's how I look at EMAs. That's how I trade them. You know, that's a breakdown. You can see. So this arrow here, I was talking about 5-minute retest, 1 hour wick fill. Shock horror, price pushes up. It's like a liquidity push really, because we've moved down so hard. It's got to have a retest. And yeah, that's literally how I trade EMAs. So, like I said to people, Wakar's the person. Next time you're on the toilet, go and read his page. Don't pester him with questions. His captions are enough to basically give you the lowdown on how he trades EMAs. Right, now let me go through the question box. Okay, Alex, everyone wants me to talk about GBPJPY. Do you want me to move on to that now, or have you got anything to add on USDJPY? Right. So now GBPJPY. Right, where are we in price? As you can see, I don't really track. Oh wow, shock horror price respects the fucking zone. I must have had that drawn the other day. So look, you've got points where price is respecting, price is there. Shock horror, price goes there because of there. You guys know how I trade. Right. Show the Scottie Pippen thing. Read Scottie Pippen's Instagram as well. He's a really nice guy. Probably help you out if you drop him a DM. You know, that was it in action. So essentially, you wait for a cross of the EMAs on like a 5-minute, 15-minute. Wait for a retest and then take a wick fill. How do you get the EMAs? I told you I use 1450, and 200. What numbers do you put in? 14, 50, and 200. Big up Tesco. Yep. That's. I think it was an Amazon mic actually, but it's just never ideal. So let me just go over GBPJPY. Sorry. Okay. So what is happening? Okay. Well, GBP so weak. You've got the economic side of things with Theresa May. You know, it looks like it's like a witch hunt coming through basically for her. I've read a little bit about it, watched the news a bit. To be honest, I don't really trade GBPJPY because it moves too quickly. But you know, if people want to trade it, happy days. But so what is currently happening? So GBP is weak, bearish momentum. You can see had a top, had a reverse. So you can see at this one here, this candle is important because it's engulfing. So this is engulfing. So keep in mind on a daily time frame, you don't want to take it. You don't want to take entries there. You want to wait for these candles here, which is like a break of a structure, but you want to break that because that's like a support, isn't it? So you'd class this point here. Why is the box green? Why is it? Okay, I don't know why that's turned green, but it has. So you want to wait for a break in structure. So you don't want to enter there. You want to take entries once this has happened. Once it's broke support, it's going to get a retest anyway. So you got that little price there where my arrow is now. So what is happening and what do I think will happen for GBPJPY? Chances are, if it breaks this, we'll go in here, which is another 200 pips. Yeah, 200, pretty much 200 standards. EMAs on the daily look good. They look like they'll cross to the downside. You've got this point here. Don't know why the box is green, but you know, hopefully it doesn't hurt everyone's eyes. So you've got that point there. Then you've probably got, you haven't really got anything, because if you look here, you've got like a wick. So that's where price is probably going to struggle a little bit. Price might struggle here a little bit. Probably gonna go there. But so what do I think's happening for GBPJPY? Yeah, it's bearish as anything. Probably a sell. If you're not in sells, don't just dive into them. Wait for a good price. Wait for continuation. Don't just dive in. Like, it's so important. Just like we've talked about on this webinar and talked about on other webinars. If you dive into price and you dive into trades, like, you're just playing yourself. But so that's what I think will happen for GBPJPY this week. I think we'll probably go here, which is like a 200 pip move at least. So it's 200 standards. TP is likely. Continuing bearish momentum, really. That's what I think will probably happen. It looks obvious, really. Maybe, you know, perhaps I'm missing something. Also, you want to check the news as well. See what the news is coming out this week. So you got, there's that. Okay, well that was the other day. You got a bit of news this week, not a lot though. Also, yen's pretty strong as well. So if we think the USDJPY is probably going to fall, this is probably going to fall, and then that will probably just follow. Yes, it is being recorded. Hope you had a good time at church. I'm not really a religious guy, but obviously people that are respect that as well. So yeah, it's recorded. Right, let me go through the question box. Obviously people was going crazy about the questions. Pin bar reversal. Yeah, okay, that was on USDJPY. Okay, GJ. Is this webinar about next week's post NFP? Yeah, we've talked about that. What does IG mean? Instagram, so it's not a stupid question. Not everyone knows that. Mike is buzzing. Yeah, I know, sorry. Can you talk about... Okay, that's going to be for you, that is, Alex. We want to talk about rally-based rally, drop-based drop, all those sayings. Mike's going into robot mode. Okay, right. Okay, how do we use the EMAs? I've talked about that. Show the Scotty Pippin. I have. How do you do the EMAs? You literally click on indicators, type in exponential moving average. What strategy do you use the most? Mostly EMAs. No, not really. I do a bit of everything. Usually just trade zone to zone though, because I like to trade bigger moves if I can. Oh, hang on a minute. Why are you muted? No wonder I'm asking him to talk and he can't talk. Sorry about that. I've just got your text. Yeah, someone wants you to talk about like rally-based rally and drop-based drop and stuff like that. I thought I'd let you handle that. Do you want to talk about that?
You finish the GBPJPY and as then I can run through that.
You don't want to do it on GBPJPY?
You can finish the... No, I'm saying finish the GBPJPY, then we can go back to UJ and...
yeah, okay.
So I can explain.
Okay, so where do I think price is going on GJ here? to me it looks obvious, and when it's obvious, sometimes it is that obvious. So don't expect price just to reverse. Maybe we'll tap this, maybe hold it as a support, maybe go back up for liquidity perhaps. So it might just end up going like this, tap that as a support, pull back, push down a bit harder probably. Market moves in waves. To me, that looks quite obvious of where price is going to go. But so yeah, that's what I think will happen for GBPJPY. So yeah, that's, it looks pretty standard. So let's jump back to USDJPY for Alex. Get rid of all this text. Okay, and now, so now Alex will talk about his RBR, DBD, RBD, and DB. Okay, those are the four, right?
Yeah.
Okay, so you want to just take the floor?
Those are the four. And I wanna. Okay. Thank you. I wanna go back to the EMAs and market structure. Like as Alex had talked about the EMAs and all that. Like for me, I never use indicators. Like I've never used indicators. I've tried, and it almost gave me a heart attack. And so I stopped using all sorts of indicators because for me it kind of misleads me. I hate it when indicator tells you what to do or where we're going and things like that. For me, I'm a visual trader. My eyes are the best indicators, and as you can see, the indicators they correspond very, very well with the zones. And so if you understand about market structure and learn about wicks and ranges and all that, EMAs or any indicator just provides extra confluence for you. Okay. I know like maybe one or two people after this webinar is gonna load up EMAs on his chart, and they'll depend on that. But what I'm saying is, first understand the technical part of it, then apply EMAs to it, and you're gonna be okay. Especially these exponential moving averages, they actually zone in well with the zones. They act as a dynamic support and resistance. I've seen that, but I don't like really use it. So now moving on to the base base rally and all that. Is essentially what we look at when price is moving. Price can move from one point to another, and let's say, for example, a base drop is price moves from the demand area to supply area, and with that it creates a base rally. So once price moves out from a zone, it moves with momentum. Once the momentum starts to slow down, it creates a base. And a base is technically where where like institutions are actually putting in their orders. So a base is like a consolidation area whereby orders are being collected for either a drop or another rally. So price moves up, reaches a certain zone, consolidates, then moves up. So that is a base, a base rally. Price moves up, reaches a zone, starts to range, then actually moves up. So that is a rally base rally. The second one is drop base drop, which is the opposite of rally base rally. So price drops down, reaches a base, consolidates, and actually starts to move again. And most of these setups usually happen on the lower time frame. So you have to understand, like if you see a base drop, you have to. It does not really manifest itself at that time. It reaches a base. You have to like wait for consolidation to happen, because it can be a rally, it can be a drop-based rally. Okay, so you wait for the range to break out, then you can actually see which kind of setup is that, you know, because like other times you can be like, okay, this is a drop-based drop, but it ends up being drop-based rally. So you put in like you put the consolidation in a box and just chill. That is where my favorite strategy comes from, and we actually gonna go through that later on. Um, so with this setup, you'll never go wrong. And the thing about it is just understanding the market structure and understanding what we are doing. And once you do that, you'll get to find that it's going to be easy for you to identify such setups. The next one is drop-based rally. Price moves from lower high and reaches a base, then consolidates, then moves up. So that way, you like, it's just simple market structure knowledge and understanding. You don't need to complicate things. You see, this is a drop-based rally, and price drops, reaches a base, consolidate, then moves up. The opposite is rally-based drop, which is the opposite of drop-based rally. So these setups, I usually take them on the 15-minute, and most of it actually, because on a higher time frame it takes much longer period of time to develop. So as a scalper, I I do analysis on the 4 hour, 1 hour, then I drop to the 15-minute and see these setups. It does not usually like happen all the time, but you have to adapt. You know, you have to be versatile in like changing market conditions every day. So a rally based drop is price moves from a support area, goes up to a base. A base is a area of a balance where the strength of the sellers and buyers are equal. So price actually is not moving in one direction until one of the parties orders become more than the other, and it forces the price to move in the direction. So rally based drop is price moves from a support area, goes up to a base whereby the equal strength of sellers and buyers is accumulated, then the sellers win and it goes back down. So it's rally based drop. The key things here is to understand, like identify and understanding what price is doing, and know when the consolidation is about to be broken and actually riding on it. Because if you do that on a lower time frame, there's a lot of fake outs. So the higher the time frame, the stronger the confirmations. That is why for me, I don't go past the 15-minute. I just trade 15 minutes and above. So it gives me less setups, but they're actually solid setups. So another person, I just received a WhatsApp from my other student. He asked me to, let me read it. Can you give a visual example of buy and sell on a box and chill? So Alex, can you just move the price to move the chart to 15 minutes or even 30? Okay. You can do 30-minute time frame or 15-minute time frame.
15-minute, all right?
Yeah, 15 minutes.
Okay, so I would assume this is, so you're probably gonna want to draw a box there maybe, and just wait. So draw a box and wait is essentially what you're about to describe. Yeah.
So even on NFP, if you had drawn a box on this consolidation prior to NFP, you would have gotten a very clear point of where we're going.
So you've got, you know, even here, there's like a box as well.
Yeah, exactly. So you just like once there's a consolidation, you just put a box there and wait for it to break and take the trade on the second candle. If there is if there is no momentum, if there is momentum, you just enter directly. For people who may be patient, you can put pending orders, which actually works, all the time. And this strategy, I can say, like, it's 100% efficient, if you're willing to wait, be patient and wait for the setup to manifest itself. It usually goes in your way 100%, and if it doesn't, I'm gonna give you 1,000 shillings. You can ask me for 1,000 shillings. I'm gonna give for the rest of my life. That is how confident I am in this strategy. And you just wait for a breakout and enter. Always wait for it to close above the zone. Enter on the second candle. If you're doing instant execution, if you don't want to do that, place pending orders maybe 10 pips away from the box, and you'll be okay. So I think that is clear understanding about the setups that I take. That's basically my strategy. The two of them. That's what I use: zone to zone, consolidation box, and the drop base, drop rally base rally. Those are the three major strategies that I use. And like this year, I have no loss, and that's exactly how I've been doing it. And
Okay,
so Alex, I think that's about it. When it comes to technicals.
yeah. So just running through the question box quickly. So that you've basically just explained one of the questions. So one of the questions is, you take like one trade a day and you have not lost this year. Talk about it. He's literally just talked about why he didn't lose, because he basically waits for price to develop, draws a box, takes breakouts. Like consolidation tells you there's going to be a move in price and it's going to be a decent move. So for example, if you draw the box, it doesn't matter whether it's a buy or a sell. It breaks out of consolidation. You know it's going to be a move, like a decent move. If you only want 10 pips, and then you just like stack a couple of positions, then it's easy, like he says. Also, this was a good question. Let me try and find it. Where would you set a take profit if it's rally-based rally? I would assume you'd move your stop losses to like break even or to cover your commissions. Like take profits up to the person, isn't it? But I think maybe take a couple of positions, close them, and then keep one, and just put stop loss at break even. Is that what you would say, Alex?
Yeah, exactly. And always move stop loss to profit. And for me, my take profit, I don't have a definite take profit. I always aim for 100 pips, and I can stack 5 positions, and each one give me 20 pips, and I might be done. But sometimes the market, once the market moves in my direction, since I'm waiting for the best setups, I usually get more. I can get 200, 300. So what I do is, once I secure my 100 pips, I can 20 pips rather per position. I can just put maybe a trailing stop of maybe 25 pips and let it run. There's no reason for you to close the trade when it's actually moving in your direction nicely. So for me, I don't have a TP, but my SL is always within the 5% that I'm risking. So that is, for me, SL is more important than TP, because you are actually risking 5% to gain 5%. So risk reward should actually be around the same, because for me it's 1-to-1, and most of the time markets gives me 3-to-1, 2-to-1, and that's okay. So it always depends on your risk tolerance. But what I can tell you is, do not keep a tight SL. Let the trade run, let the trade breathe, and just give it flexibility to just move around. But it should be within your risk tolerance. And most of the people in the family, see like maybe mentors and other guys, you know, maybe going full margin, and you think that's okay. That's not okay. You know, you don't know if it's in his plan to go full margin. You know, you don't jump the hype. Just stick to your plan and what like risk whatever you're comfortable with. You'll be okay.
Hmm. For sure. I think you see a lot of people do, talk about the full margin hype. I've never gone full margin. I've never really had a bigger risk than like 1% per position. Like, it depends on the person. Like for me, I'm always doing, my risk is always 1 to 2 at least. Like you've just said, there's no reason to close a trade if you don't have a risk. So if your stop loss is at break even and covers your commissions or covers your spread or whatever, like why would you close? You like, it makes no sense. Like you can only gain, you can't lose anything. So why would you close it? You, like you said, just use a trailing stop. Can you give an example about consolidation block again? Yeah, okay, so look at the screen now. You draw your consolidation box essentially using the wicks as your guideline, like the wick high and wick low, maybe on a 15-minute time frame, like Alex says. 15 minutes probably a bit more effective than anything else. And you can see now price moves down, consolidates, so it's like drop base drop as well. So you place pending orders above or below the box or take instant executions when it breaks out on the second candle. So for example, maybe you trade this candle. As for the stop loss, I mean, it's pretty subjective. Like, and he's talking about standard pips in terms of his stop. So what he said was, and what I always say is, your stop loss is up to you. It depends how, if you're aiming for 100 pips, your stop loss needs to probably be 50 pips because you need, like he just said, you need to let the trade breathe. How small of a break outside the consolidation box to consider an entry? We said second candle. Can you point out where you entered before NFP? Oh, I didn't trade NFP. Okay, yep. The question box is funny sometimes. Bottom left. What time frames did you draw a box in? Minimum 15 minutes. I'd agree with that. Can you give an example? Okay, that's done. Stop placement. Yeah, we've done that. Find it interesting. Yeah, it will be in the Google Drive, I would assume. Where would you enter? Yeah, I've said that. This is a good one, actually. Six guard, can you please go over order blocks? Do you want to talk about order blocks briefly, Alex? We pretty much
Okay, let's just go to yeah. So go to the 4 and
okay.
4 or even the daily.
Okay. Okay, daily. It's here.
Yeah, move to the left.
Okay. Is that all right?
Yeah. So let me just explain like briefly about order blocks. But if you're in the Forex family, you should go and contact Mastermind FX. If you're a TED student, there are a couple of webinars in the drive. Dave explained this in detail, so I'm just gonna go through it briefly. So, like price moves from demand to supply area, and vice versa, and with that it creates what we call order blocks. Order blocks is just orders of blocks of orders rather, where institutions place their orders. Now, if you see this bearish trend over here, like if you look to the left, from 17th to 18th September, I think this is July. No, this is 17th to 18th. that was a deep bearish order block. Now you see, every time price tries to moves up, it goes back down because bearish orders were actually placed above the this range over here. So what you expect is, as long as we're in a bearish order block, we would be looking to take buys, and as long as we're in a bullish order block, we would as long as we're on a bearish order block, we would be looking to take sells, and as long as we're in a bullish order block, we would be looking to take buys. Now if you look at the bearish order block, every time price starts to go up, it comes down twice the momentum it went up with, because bearish order blocks are in place. That is just like bearish trade orders were being placed on that range, so price cannot actually pass that, and once it does that, it goes up, it takes out some few orders. It does that repeatedly, going up, and once it has been taken out, you see now price just pushes through the zone with momentum. It actually breaks a lot of zones. Now, as you can see, with UJ right now, we are taking out the bearish order block, so price is actually bullish with a lot of momentum, because all the bearish order blocks, if you look left, were being taken out systematically. And this is something that I cannot actually explain in one webinar. You have to actually go through it. It takes maybe 4 hours or even 3 hours to explain all this. And Mastermind FX is the one who actually taught me about this, and I actually went and did my own research and all that, and he's actually gonna help you guys if you're in the Forex family. He has a couple of webinars in the drive, so you guys check that out. And basically, if you know order blocks, you will be able to understand where we are going. You wouldn't to second guess. So it's as simple as that. If we are going down higher time frame, look for sells, because we are in a bearish order block. If you're going up, look for buys, because the bearish order blocks are, well, all of them were taken out. So price is actually just pushing through all the zones without any restrictions whatsoever. So I think I've just gave you an idea about what an order block is and how to actually maximize on them. It's as simple as that. So Alex, I think I'm done with that. For more information, just contact Mastermind FX in Instagram. He's gonna help you out more if you wanna learn about order blocks. Technically, that's how the banks trade. And so yeah.
Okay, that's a great description again. I'm just quickly taking a snapshot of the webinar. Okay. So we've talked about, let me just go through the question box and then we'll talk. We talked about mindset briefly, but also Sammy and Rag are doing a webinar on mindset as well. So anyone that struggles with that, definitely have a look at that webinar. It's today at 10 AM their time, which is like 3 PM UK, I think. So question box. Okay, well, you've gone over order blocks. Yep. Can you give an example of your trades? Yeah, go on both Instagrams. Also, we've pretty much talked about it all webinar. Talked about how we trade. I'd use EMAs and obviously use zone to zone, etc. Alex uses the examples that we've seen. We've seen pretty much zone to zone, supply demand. It's all the same kind of bag, really. So what we'll do now is, so I did a webinar the other day based on consistency versus profitability. That's going to go on YouTube soon as well. But so we've covered, so technically I think we're pretty much all done. So I'd say maybe shout your questions into the box and I'll read them out, and then you can obviously get my opinion and Alex's opinion on them. And I mean, apart from that, we're pretty good. So throw your questions into the box and myself and Alex will go through them. one by one. Not a question, but thank you so much. You're welcome. Thank you for attending. How many pips stop loss? I use like 5 or 6, sometimes less. Sometimes like I've used stop loss of like 3 pips sometimes. Well, but like so, Alex, I'd assume we talked about stop loss. Basically, your stop loss needs to be, if your stop loss is 5 pips, your take profit needs to be 10 really, because what's the point of risking? Like Alex said, if you're risking your 5%, why would you risk 5% to only gain 1% back or 2% back? Like, it doesn't make any sense. So your stop loss needs to also match up to your take profit. Do you use simulator? Yeah, the software for FX. Yeah, you can get it on your MacBook. You just need Parallels, which is like a Windows for Mac. On the consolidation box, do you bother waiting for a retest of the box before you enter? If it breaks out, usually it's going to push, price is usually going to push quite quickly anyway. So maybe you could wait for a retest or like a last kiss, but I would probably, as Alex was saying, I would probably just take entries or use pending orders. You guys are awesome. Yep, thank you very much. On the consolidation box, no, I've read that question. On the 4-hour UJ, why was the 2 wicks above the orange zone not marked? Which ones? Can you please cover how to plot zones? We've both done loads of webinars on those, but essentially use wicks as your guideline is what I'd say. Is the UJ on daily time frame consolidating? Yeah, I'd say it is. Sorry, I missed the MacBook thing. Okay. So if you want the simulator soft for FX, or for your MacBook, so if you're working on Mac and not Windows, download something called Parallels. If you Google that, you'll find it. It's like Play on Mac. It basically lets you use Windows programs on your MacBook, because obviously Apple isn't Windows, and you'll be able to make it work. So that's how you do it. How do you know when the trend is ending? You don't. So 1, it's subjective, and 2, don't try and call the top or call the bottom. Like, please don't do that. Like, I can't do it. Alex can't do it. Nobody can call the top or bottom. Like, it's just too hard to do. How do you know when support and resistance is breaking? You don't. Look on the high time frame. If you get a clean break, like 1 hour break of support, then there you go. But often 1 and 4 hour will probably bounce usually for the first few times. More taps, the weaker in my opinion. Depending on your broker. Okay, yeah. Sorry if this is a noob question, but can you explain zones? Okay, use the wicks as your guideline. Essentially, wicks are formed because they're either like price pushes. So, for example, you got 2 parts of a candle. You've got the wick, which is obviously like above or below the candle, and you've got the body, which is the thick of the candle, and not the main movement of the price. So, for example, you can see on the last candle, so Friday's candle, a massive wick taps that zone and then comes all the way back down. So the wick's formed because obviously we're fighting between the bulls and the bears, buyers and sellers, and you can see that buyers try to push price up, sellers push price all the way back down, closed as a bearish candle, and therefore you can see it's a red candle, or candle color doesn't matter, but you can see why there's a wick on the candle, because essentially the sellers lost. No, the buyers lost, sorry. For USD pairs, can you check the dollar index? Yeah, good idea. Yeah, you can for Confluence. Hi guys, how do you manage a trade that breaks out a consolidation box, then goes back in and turns the other way? Well, yeah, I mean, chances are high, as long as you're doing high time frame consolidation boxes, chances are it's not going to just reverse. It's probably just going to continue with trend. But I mean, it's hard to know. It's hard to know if it's going to reverse. So it's too subjective. Where do you think USD CAD will go? I don't know. It's not really my pair, but obviously USD numbers are good. Economy is decent for the US at the moment. But obviously the interest rate for Canada came out and was good for Canada, so obviously pushed the price down a couple of weeks ago or a month ago. Sorry, I just joined. When the daily is at support, rejecting from support, and the small time frame is at resistance, what trade should you take? Neither. You know, it sounds like you're talking about the middle of the range. In London Open, USDJPY, neither. Would this be considered filling the wicks on the daily chart? Maybe, but not in my opinion because so on a Sunday, usually Asian Open is bullish like 70% of the time. I think it was Raquel that told me that. I don't know why. He's told me that, but he never said why it was. I personally don't trade Sundays, neither does Alex, because market's got no structure, so I don't really know. Next question is, you always draw your zones from the wicks. Yeah, use them as a guideline. Any tips for creating a trading plan? This is a good one. So I've talked about trading plans a lot, and I know Alex talks about trading plans a hell of a lot. He hasn't lost a trade for a reason, because he literally just executes his plan like the same as me. I take losses. So I take losses, but not many. So like the last couple of weeks, I took like 1 or 2 a week. And for me, it's inevitable because I trade a lot more than he does. So probability tells you you might lose at some point. But so trading plan, we did it on a webinar yesterday as well with Raquel. Trade 1 pair or 2 pairs. Identify what kind of trades you want to take. So do you want to take rally-based rallies, drop-based drops, zones, EMA crosses, wick fills, whatever your style is. Work out your risk. Is it 1% per position or 5% total, or I don't know. Work out what your goal is, and essentially just stick to the plan. If your plan is sell resistance by support on the 1 hour and 4 hour, then just do that. Don't try and do something else. So just because Alex trades how he trades doesn't mean I want to trade like him. It works for him, might not work for me. Same way he probably doesn't want to trade like me because it works for me, but it might not work for him. So he said because Japan likes yen to be weak. Yeah, that might be why then. So that might be why Asian Open on Sundays is bullish. But I don't know because I don't trade it. All I do is check in the morning on a Monday and say, oh, yeah, I knew that happened. Can I explain his box and chill thing? He has, but essentially draw a box, use the wicks as a guide. So use the highs and lows of the wicks, and essentially just wait until price breaks out either side. Use pending orders or market executions. Why is scalping profitable rather than swinging? They're both profitable. Swing trading is just holding your positions with bigger take profits for longer. Scalping, you're essentially paying yourself for like being in the markets for less time. So it's, for example, they're both profitable. There's not really a difference. The only difference is the time frame. Like, you're still doing the same thing. So if, for example, you're trading rally-based rally and you're scalping, then you might be in and out of your positions in half an hour, but I might be holding my positions for 3 days because I know that we're trending. So I know I'm going to get more out of the arrangement, which is why obviously a lot of people hold the positions. But if you've not got a risk, why would you not hold your positions like we just said? GJ's at support now. Yeah, if it breaks support, it's going to go down like another 200 standards to like 145, I think. Seems like a logical area of price. Okay. Let me just cover more questions. Are your other live webinars free or for members only? So Alex obviously puts webinars on for his students. I put them on for mine. We've done this webinar just to give back, really, to people that aren't our students and people outside for its family. But yeah, so you know, Alex does one-to-ones with his students. I do the same. So yeah, our live webinars are obviously for people that are our student. Pip Princess. Sorry I'm late, but how do you know if a zone is fresh or not? Okay, so look what I've marked up there. You can see on the daily time frame, I've marked up as, you just look for rejection, in my opinion. So look on a smaller time frame for rejection. So how do you know if it's fresh? Well, I'm never really marking them up because I've always got my zones drawn because I've always looked left. So yeah, good name. Okay. Any more questions? Any more questions? Rich 32 and Avellino fire in the booth. Yeah, it's good. Make sure you check it out if you don't already know about it. It's pretty special. It's pretty special. Next question. Check whom. Okay, so it's on YouTube. Wretch32, in my opinion, his flow is ridiculous. Especially because he's English as well. His flow is unbelievable. Like, he's a really good rapper. In my opinion, really good artist. How do I become a member? Ask either of us on Instagram. Ask some more questions. Loki fire in the booth is better. Maybe I'll check it out. Personally, I like Stardom's fire in the booth as well, and I like Stardom because he's from Brum, and I am from Brum as well. Okay, any more questions? Looks like we've answered everything, to be honest, Alex. Have you got anything to add, or any topics you want to talk about?
I think now that like maybe you cleared most of the things, I just want to talk about psychology and actually having a trading plan, and my students and guys from the Forex family, they know that I really insist on having a trading plan, because that is a career, like that is a roadmap for your trading career, and most people fail not because they are not meant for this or they're not cut out for this. It's because they come into Forex, think they'll make $1 million a day, or they'll become rich quickly. Yeah, you can do that. You can become rich, but do you have a plan to become rich? You have to have a roadmap on what guides you towards wherever you wanna go or what you wanna do. And with Forex, this is an industry whereby there is no working hours, there is no dress code. You can trade naked. I'm a naked trader. There is no rules governing this thing. The only rules are for you to create yourself. That is why you see guys who succeed a lot, or students who actually prosper in their trading or accelerate their learning. They always have some sort of plan. And you see these other people, you can study all you want, but you cannot be good if you don't have a trading plan, because a trading guides everything for you. Like for me now, my trading plan allows me to only take trades when the trade is in my favor. If I see that there's nothing that can tell me, okay, Alex, all these confirmations are valid for you to take a trade, I will not take a trade. People ask me like, why haven't you lost in a trade in like 1 year? I'll be like, yo, I don't know. Ask my trading plan. It's because I followed my trading plan, and sometimes when I trade twice per day, I feel really bad. Even if the trade turns out to be successful, I feel bad because I deviated from my trading plan. And that's why you see me like when I post and be like, yo guys, see you on Wednesday. I mean it because gave me maybe 30%. So I'll be like, okay, 30 divided by 5, that's 6 days. I'll not trade for the next 6 days. That is how I keep my streak, and that is how I maintain my consistency. But now you see so many people, they trade, they make a lot of money, then back into the market, trade again. Now the second trade, they didn't even analyze it, they didn't plan for it. It's out of their trading plan. The trade ends up being a loser, and now he has to go back to zero. And after repeating himself over and over again, he ends up quitting and says, okay, Forex is not for me. Forex was for you, but your brain, your discipline was not there in the first place. So maintain discipline and just follow your training plan. Don't let your mind play you. Just stick to your analysis. Just do proper analysis. If it's a buy and your analysis says so, take that buy. If it ends up being a loser, go back, ask yourself, where did I go wrong? What did I look? Sometimes losses just comes naturally, and that's okay. But most of the losses are things that you can. So if you identify your strengths, your weaknesses on the market or on the daily, like maybe your daily lives, you can actually be a better trader, because now you'll identify yourself. You'll know who you are, what freaks you out, what makes you strong, what is your edge over the market. And when you put that down on the paper and you trade, actually you're gonna make it, because you know your position, you know yourself, you know your strength, you know when to get in, when to get out. And once you have a plan, a definite plan to approach something, chances are the outcome will be favorable. You know, like for example, if you're a guy and you really like a girl, you just don't go over to the girl and be like, oh, you like girl. But if you have a plan of approaching her and talking to her every single day, at the end of the day, chances are you might have a chance with her. So why do you have a plan about every other thing except when it comes to Forex or when it comes to your trading? That's the problem right there. It's not about the strategy. We have explained every single thing over here in regards to technicals, where we think the dollar is going, where we think the market is going in the coming. But if you don't have a plan, you're gonna fail. You know, I'm gonna make money, Alex is gonna make money, you're gonna blow your account, and you will fail, and you will start crying. And you know what? Like, it's up to you to actually take responsibility of your trade, plan your trade, execute it, and stick to your plan. You know, I posted some time about if you make 5% a day starting with $100, you're gonna make 21.8 million. So many people argued with me online, be like, you're a stupid person, you don't know what you're saying, it's not achievable. Who told you it's not achievable? I did it. I opened an account with $100. Right now it's at $600. You know, like doing the 5% challenge. So if it's working for me, why are you telling me it's not working? Because they are not disciplined enough to maintain a 5% winning strategy. Sometimes you make 5, sometimes you make 20, and that's okay. If you lose, the others extra percentage you make on the previous day will add up to it. That's operational costs. You know, I'm a guy in the Forex family called Ruben. He went from $100 to 200,000 in 1 year. Like, what is that? It's not witchcraft. It's not voodoo. It's discipline that will get you there. So just maintain discipline. Have a trading plan. Don't let your mind play tricks on you. Don't let somebody tells you it's a sell when your analysis tells you it's a buy. You know, stick to your analysis, trust them. And another thing, just get your percentage. If it's 100 pips, take the trade away or put trailing stops. Do not marry your trades, as Ted says. You know, you'll end up dying. So trust your analysis, execute. Okay, like just if it's a buy, don't second guess it. Wait for your confirmations. Wait for the trade to come to you. If it's EMAs, if it's zone, if it's Fibonacci or whatever, wait for all those confirmations that you're looking for to come to you, then you execute. And don't even second guess anything. Just do it, you know? And wait for it to go the way you want it. And that's exactly how I tell my students, you know? There is no shortcut. And after that, take a picture or a screenshot of your trade before and after. How do you feel about this trade? Have a trading checklist. If you're in the Forex family, we have trading checklists that you can actually print out. And before you trade, you feel all those things: date, time, what you look for, your mental states. Are you nervous? Are you happy? Are you prepared? Like, the checklist is in, I think, practically all the drives. So you don't have any reason to fail in this. Because I tell people, like, Forex is the simplest thing you will ever do that will give you money. But before you get there, you're going to have to work a lot harder. Understand your own self, understand your psychology, and things like that. And don't jump from pair to pair. Stop Forex prostitution, you know? Just stick to one pair, maximum two. For me, I stick to UJ, and it's okay. I don't know about other pairs. Because UJ gives me money, so why should I go and I don't even trade every day. I can maybe trade once per week or even twice, and that's okay. You don't have to trade every day. Just trade when it's in your favor. Plan it, you know? Let the trade come to you. When it comes to you and you take it, the outcome is in your favor, okay? You can go to the groups, you see all the guys making money and all that. That's okay. And the day you'll make $1 million, nobody will ask you to give a percentage to them. It will be your money and you will deserve it. But as for now, have that plan of getting there, okay? You already have $1 million already. It's waiting for you, but how are you gonna get it? Have a plan to do that. So in short, is take responsibility of your trading, have a plan, stick to the plan, and rinse and repeat. Repeat the same things over and over and over again, and the outcome will be the same. Unless the outcome is bad, then keep doing it. I think that's all I can say. And I'm pretty sure you guys will just go over, do all that, and you know, maybe we'll have another webinar sometime, and we can actually maybe go through some details in further explanations. But as for now, this is exactly how we do it, and I think there shouldn't be any issues regarding psychology, because it's all up to you as a trader to actually think if you're in it to win it, or you are like one of those guys who gives us money every single day. So it's up to you as a trader to actually gauge yourself, have a plan, approach the market with a solid trading plan, and you'll be okay. So Alex, I think I'm done. If there's any questions, maybe we'll just read out.
Yeah, sure. Okay, so if anyone's got any questions about what Alex has just covered, and also maybe just for me to add on to that, if I ever deviate from the plan, I'd make losses. Like, you know, Alex hasn't lost a trade for a reason, and the reason is the plan, like he just talked about. Like, I only take losses if I take a trade that's outside the plan usually, or I'll take a loss if my stop isn't big enough, or if I just get caught on the wrong side of stuff, you know. Sometimes, so if I'm trading support resistance, sometimes they break and sometimes you get stopped out. Like, your stop loss is there for a reason. So even if even if you do take a loss, don't worry about that. So what's a minimum you should start a trading account with? We've literally just said you can start with $100. You can start in the UK with like £20 because there's accounts where you can open like mini accounts, like baby lots. So you can trade like fractions of pennies if you want to. If you can't trade a small account, you can't trade a big account. Ted talked about it yesterday, but it's unbelievably true. If you can't turn $100 into 150, how are you going to turn 1,000 into 2,000, or 10,000 into 20, or 1 million into 2 million? It's just not going to happen. Which pair's better for London Open? I don't know. It's up to you. GJ moves fast in London Open. Sometimes you can get stung. I got stung a few times on GJ, so that's why I don't trade it. UJ, literally like we just said, if you stick to one pair and you know it inside out, I could tell you, I could sit and talk to somebody about USDJPY for days and just talk about it as a pair. So, excuse me, if you understand one pair, then you'll be fine. Best advice you could give to a beginner: study more than you trade. Definitely study more than you trade. Best advice I could give anyone. Even so, I'm doing webinars. Alex is doing webinars. We're putting webinars on because, one, it's good for other people and good for our students, and it's good for us to be talking about what we do because it just reaffirms the knowledge in your own mind. Any good books to read on psychology? Yeah, you can. I'm pretty sure Trading in the Zones psychology book. Also, you don't even need to read a book. Literally, just listen to what we just said about being in control. Like the checklist thing is important. What Alex said. So, for example, what kind of state of mind are you in? In my trading plan, I've got like little rules at the bottom. So it says if I'm annoyed at something, I don't know, if I have an issue with family, etc. If I have an issue with my girlfriend, I don't know. I'm not going to trade because I'm not going to be in the right state of mind. So I'm going to take more positions than I should, less positions than I should, close early, don't close. I don't know. Your judgment calls are going to get clouded usually. Six God, do you have a YouTube channel? I don't know. Do you have a YouTube channel, Alex?
Not yet. I'm gonna look into it, but I don't know. No, I don't have it.
Okay. I've got one. So I don't know. Maybe we'll put this on YouTube eventually. But like Alex says, he's looking into YouTube. I like YouTube. That's why I'm obviously trying to grow mine. If you just type me in Alex Hill FX, I'll come up. Make sure you subscribe and like all my content and watch it all. YouTube is a community that I'm trying to branch into, really, just because I like engagement. I like just growing my following because I like interacting with people and meeting new people. How do I join the group? What group? If you want to join anyone's group, just contact them on Instagram. That's my best advice. Very good webinar. Thank you very much. To be honest, I think that's all the questions. I think we've pretty much covered everything. We've covered technicals, we've covered non-farm payroll, we've covered what's happening next week probably, and we've covered mindset. Do you give signals? No, I don't. I'm not licensed to, neither is Alex, not that I know of anyway. A lot of people on social media aren't licensed to, it's direct advice, so if you're not FCA registered, then you can't do it. You don't need signals. Please don't follow signals. Just trade on your own. Learn to fish on your own, and then you don't need anybody else. Okay, to be honest, so we've covered psychology as well. Covered how to build a trading plan. I've posted mine on Instagram before, so if you haven't looked, just scroll down my Instagram, you'll find it. Or look at the webinar yesterday that Raquel did, because I talked about trading plan on there, and I talked about trading plan on my webinar on Tuesday, I think. How do you study a currency pair? Do you just study patterns over the past? Yeah, just look to the left. Look at the session. So session timing is important. So if you want to trade London session, look at London session in like the past and what's happened in London session. So for example, if London session you see at 8 o'clock you get a push, at 9:30 you get a retracement. It's about knowing the session and knowing when's the best time to execute. So if you want to trade a pair, study the pair. If you want to trade a session, study the session. It's up to you. But apart from that, we're done. No more questions. Okay, cool. So guys, obviously we have been the Alexes, Posh Spice, and Forex6 God. If you don't follow us already, make sure you follow us on Instagram and all social medias. So it's at Forex6God and at AlexHillFX. But yeah, so we've been on here for like 3 hours now. Sorry about the mic issues as well. That does happen sometimes. But hopefully that was just a small hiccup. This has been recorded and it may go on YouTube at some point. But thank you for attending, and that's me. I'm signing out. So make sure you guys have a nice end to your weekend. Alex, make sure you have a good weekend, buddy. And we'll attack the markets maybe Tuesday, Wednesday when prices developed.
Oh yeah.
Yeah,
So thank you everyone for attending this webinar, and we might have another webinar soon. We'll organize it and let you guys know. But personally, I'm gonna do a supply and demand webinar soon, maybe in the course of the month or next month, I think. And I've also my PDF on the same is being released soon, so watch out for that. And will be good. Success on your trading this week. I know I'll have another 100% week, and I've already seen that. So success to you guys, and Alex, thank you so much, and I'm out.
me too. Have a good weekend, everyone.